Good morning, members and guests. Thank you very much for attending another ShareWise webinar. We're joined by Rural Funds Group today, which is going to be very exciting to speak about their portfolio and overall strategy going forward for the next second half of the financial year. We're going to have a look a bit more at the outlook, but we're joined by James Powell today, Investor Relations and General Manager for Rural Funds Group. It's an absolute pleasure having you on our webinar today. I look forward to getting through a few questions. Ultimately, James, for yourself, you've been with the company for a while. How are you seeing things at the moment going in the farming industry?
Oh, thanks for the introduction, Lachlan, and for having us here today. I suppose what we're seeing in the sector is a number of tailwinds, and particularly in the commodities in which we're operating in, albeit the majority of our assets are leased. There's improved commodity prices and still quite good sentiment.
Excellent. Well, obviously, for people that have not attended our webinars before, we will go through a bit of a presentation that James will run us through, and then we'll have at least a 15 to 20 minute question Q&A section. If you have any questions, please submit them through to the chat, and we'll get through to the Q&A box. We'll try and get through to them. But apart from that, James, I will let you lead the way.
Thanks again, Lachlan, and thank you to the people that have joined us online today. I've structured this presentation so that it will go for approximately 15 minutes. And then, as Lachlan has mentioned, happy to take questions afterwards. A lot of these slides are sourced from our half-year results presentation, which is available on the ASX, which includes this important disclaimer, which is up on screen as well for you now. In terms of the way that I've structured the presentation, really to provide an overview of the business of the Rural Funds Group, I have included some of the key slides outlining our half-year results, which were released back in February. That's in section 2. I'll probably move through that fairly quickly, but happy to refer back to it if required during the Q&A, and then provide a conclusion as well. But first, starting with an overview of the Rural Funds Group portfolio and the strategy for the business. I like to start on this slide that really provides a historical snapshot of very high-level portfolio metrics, including earnings and net asset value, effectively since we listed the fund in 2014. So the Rural Funds Group, the ticker being RFF, is an agricultural real estate investment trust, and it was the first of its kind with a focus on diversification to be listed in the Australian market, and it is now included in the ASX 300 index. Throughout the course of the Rural Funds Group, one of the key investment objectives has been to provide our investors with a regular and growing distribution, and that information is embedded within this chart. And I might just sort of talk you through this chart. If I start at the top, we have some circles, then we have a purple line, and then we have a green and grey bar. They're vertical bars, and then we have some horizontal bars under those. The horizontal bars show the assets or the sectors in which the fund has been diversified at the point in time which they're showed. And then the earnings, both cash earnings reflected as distributions and non-cash earnings reflected as green bars effectively above those distributions, are shown towards the center of the screen. And then the overall portfolio size based on a per unit net asset value, and then an outright number. So you can see since the fund was listed, we've grown the fund from about 0.2 billion to 2 billion property assets today. Our investors' net asset value has grown from about $1 to over $3 per unit. And our distributions, which started at 8.5 cents per unit, have grown to just under 12 cents per unit, representing over a 3% annual average rate of distribution growth. Those distributions are paid out to our investors on a quarterly basis. And as you can see, the Rural Funds Group has really built up an excellent track record of providing our investors with not only regular distributions, but growth in those distributions, and then growth in the underlying net asset value of their units as well. The next few slides will really drill into each of those elements. So what's within the portfolio, and then the strategies that we use to achieve higher asset values, which of course within our particular business is a read through to higher farmland values. This slide shows the focuses on the leases within the Rural Funds Group. So being an agricultural REIT or an agricultural real estate investment trust, the majority of the group's assets are leased. And as at the half, that represented about 84% of the revenue which was forecast to be generated by the fund. The businesses which are shown in the centre of screen are our largest lessees. And as you can see, they're really dominated by institutional type businesses, many of whom are agricultural processors or operators, and some of whom are also either listed on a foreign exchange or a domestic exchange. And this is really one of the critical or the important features of the fund is the high quality nature of the lessees for the assets within the Rural Funds Group. Of course, these are the businesses which are paying the rent for the use of the agricultural assets that are owned by the unit holders of RFF. And of course, it's those rents which fund the ongoing distribution for the unit holders of RFF. Those leases are reflected across assets within the portfolio that are shown on the left-hand side of this page. So as you can see, we've got a group of assets in cattle, almonds, macadamias, and cropping. And if I now move into the next slide, you can see the relative weights of those assets within the portfolio. So the pie chart on the left really shows the forecast revenue by sector for FY25. And you can see we generate about a third of our revenue through the lease of cattle properties, or primarily the lease of cattle properties. We generate another third through the lease of almond orchards, and then 20% through primarily the lease of macadamia orchards. In addition to those three dominant sectors within the portfolio, we have a portion of our portfolio invested in cropping properties, and there's been a recent transaction within that sector that I'll take you through later in this presentation, as well as 5% of the revenue is derived through the lease of vineyards, and they're all leased with a very high quality business in the ASX listed Treasury wine estates. About 7% of the portfolio revenue is derived from other sources, including the lease or annual allocation sales of water entitlements. Leasing is obviously a focus within RFF, and this slide really shows the weighted average lease expiry across the various sectors within the portfolio. So we have a weighted average lease expiry of around 13 years, and that was the WALE, as it's abbreviated to, at the half year results. And that WALE, I would say, is categorised by quite long leases within our permanent plantings. So the macadamias in particular have extremely long leases. When we we entered into those lease agreements, they were for 40 years. And as you can see, the expiry of those leases is in FY63. There's also a portion of our macadamia orchards which are operated, and I'll touch on that shortly. We also have a large group of expiries of almond orchards, again, not until FY38. So the permanent plantings, the assets where we have trees in the ground or vines in the ground, you can see tend to be longer term leases, and the shorter term leases tend to be things like annual crops such as cropping or another by extension sector which would fall into a similar category, of course, is livestock. And we have some nearer term lease expiries for those types of assets, as well as water, which we lease out as well. So really the last few slides have just provided a helicopter overview of the business, and perhaps if I just take this time to summarise, it is an agricultural property trust with a long-term track record of delivering additional value to our unit holders through increases in the net asset value of their units, as well as increases in their distributions, which have been paid at a regular frequency. Those distributions are effectively funded by leasing out high quality agricultural assets in a fairly narrow range of agricultural sectors to high quality lessees, which I gave those on the call a list of earlier. Now I'd like to sort of move into, well, how do we generate higher returns for our investors? And really that's where this slide conveys that information. Rural Funds Management, we are the external manager of the Rural Funds Group, really have an active strategy when it comes to the management of agricultural assets. And we're seeking to value add through two key methods. One is to improve the productivity of farms, and that's explained on the right-hand side of this chart. And the other strategy is to convert assets through a higher and better use strategy. So a productivity improvement, generally you're staying within the same commodity type. What we're doing is developing a farm so that it can, in the case of this example, carry more cattle on the property, as well as achieve higher daily average weight gains. Those metrics will, all else being equal, improve the profitability for the operator, which enables the property to be leased out for a higher rate in the majority of our lease structures. From a higher and better use strategy, typically there we're changing the type of commodity which is grown. So the graphic shows converting sugarcane farms to permanent plantings, which of course is a strategy we've been doing recently in the macadamia sector, but previously we've done that in the almond sector, and then Rural Funds Management 20 years ago did that in the vineyard sector. So these are strategies which the manager is very familiar and has a good track record of deploying, and the sectors in which we are deploying them are ones that are really well known to us. So Rural Funds Management has operating experience in all of these agricultural commodities in which the Rural Funds Group is currently leasing assets. This next slide really provides a very neat case study of that productivity improvement strategy. And in fact, it's been catalysed because there was a transaction earlier this financial year where, after developing some cotton properties, and that development process is illustrated graphically on the right-hand side of this page, whereby we are identifying assets that are suitable for developing additional water storages. And with that additional water storage capacity, we're then able to then develop additional irrigated cropping area, hence the productivity improvement. And those developments then preceded the signing of leases for these two farms, Mainland and Bamba Plains, which happened, as I say, earlier this financial year. So our development strategies quite often precede the leasing of assets, and the view being that we can generate higher lease rates and better lease terms on assets which have been developed, particularly where there's a demonstrable productivity improvement, or alternatively, a higher and better use conversion. This particular transaction, the arrangement also included a 50% sale of these farms. And so that was a way for the Rural Funds Group to be able to realise some capital, which it can then deploy on other CapEx within the business, which is seeking to achieve similar strategic objectives. And those strategic objectives are really on a number of the farms which are displayed on this page. And these are assets which are not currently leased out. I mentioned 84% of our assets by FY25 forecast revenue are leased. And then we have a number of farms whereby we still want to improve those farms or undertake some developments on these assets prior to entering into long-term lease arrangements. So we have I suppose if I could summarise, a ballast of rented out income producing assets within the portfolio. And then we have some additional farms which are highly suited to either productivity improvements or higher and better use asset conversions. I've just gone over our described 15-minute presentation, but I thought it was also worth touching on the sustainability focuses within our business. And really these sustainability focuses align with our internal desire to produce more with less. And this graphic is of some of is of the macadamia orchards and is of some of the sustainability features which we're rolling out on some of the orchards which are being developed. And really what it's showing is the use of technology and the ability for additional data capture to then reconcile ultimately with yield production, we believe will be a significant driving force for producing higher yields and more sustainable assets within this category and others within the portfolio in the future. So these are some principles which we're including in the development of assets which are happening as we speak.
Beautiful.
And Lachlan, shall I pause there for Q&A, or did you want me to provide a wrap up on the results and outlook?
I think we do. Results and outlook are always very important. I find most investors really want to have a look into that one. More or less, I think the initial questions I'm getting is with regards to strategy. And I understand that we'll probably talk about results furthermore, but obviously over the last couple of years, there's been a major reduction in poultry. Is that an area that Rural Funds is looking to diversify back into, or is the yield just not worth your time?
It's a very astute observation. So I've just gone back to this earlier slide. You can see when the fund was first listed. So if you cast your eye to the left-hand side of the bar chart, FY14, we generated almost 50% of our revenue from the poultry sector. And then that reduced in relative terms over time. So what happens is we invested in other sectors within the portfolio and grew out those. But of course, after FY20, that sector revenue generation has stopped altogether. And that's because we sold those farms. Those farms were approaching the end of their useful life. And when we looked at the CapEx that was required to redevelop a portion of that poultry infrastructure, and then we looked at the suite of other opportunities that we had to deploy our capital into, we felt that it was better capital allocation for us at that point in time to invest in other sectors.
Okay. And so at the moment, if you did have more capital, where would you want to be investing in? What would be the option?
Thank you. And I'll take that
It takes us
opportunity.
back to our outlook, doesn't it?
It's probably not immediately evident from this slide, but this is a really exciting sector for us, and that's cotton. Rural funds management has put down a cotton crop, almost every year for its 27 plus years of operations. So it's a sector we know extremely well. And what we're seeing is additional advancements in plant breeding as well as growing techniques. I've been with RFM for around 17 years, and when I first started, we would have been thinking of cotton yields of sub 10 bales per hectare. And then through plant breeding and so forth, the expectation around cotton crops went to, say, 12 bales per hectare. And now what we're seeing is some of the producers in this part of the world, by virtue of being able to exploit the additional season length, which comes from a Queensland summer particularly, being able to exploit that additional season length means that some of the operators in this area have been able to grow yields in excess of 20 bales per hectare on some of the blocks within their properties. So yield is really a key driver of returns in agriculture, and probably one of the more controllable components. If you think about, well, what is the fundamental return from farming? It's yield times price minus expenses. There's not a lot you can do about the price, but if you can generate additional yield, that's really attractive to agricultural operators. Where that benefits the Rural Funds Group, of course, is that we have the ability, as shown on this screen, to develop farms for lessees that really have the potential for generating higher yields through irrigated cropping techniques supported by very high quality irrigation infrastructure that is recently developed by RFM. So it's not to say that the other sectors are disappointing, but what's really standing out for us at the moment, and if we had access to incremental capital, we would certainly be looking closely at more investment in the cotton sector in Northern Australia and more specifically probably Queensland.
Lovely. We might continue on with the outlook from there, but obviously things are looking quite promising with commodities at the moment. What's more or less the outlook that we're looking at?
Yeah, I mean, so the commodity prices have, particularly in permanent plantings of almonds and macadamias over the past few years, have the price of those commodities, those nuts, has gone up. Where that really benefits the leased assets is obviously the lessees. That's a very good thing for us. We want profitable lessees. So when they're enjoying high commodity prices, that is something we're pleased about. In terms of the results so this is the results to 31 December 20 of last year. So these have been published on the ASX when we reported them in February, and I might just pick out some of the key highlights. First of all, we've seen an ongoing increase in our net property income, not an insignificant increase either. And really what's driving that additional revenue generation is we're developing macadamia orchards within the fund, and the way that we've structured the lease of the first 3,000 hectares of our developments is that as we spend money developing those farms, the Rural Funds Group starts to earn rent on that capital that is being deployed. So of course, as we've been developing farms, we're deploying capital, and therefore the revenue within the group is increasing. In terms of our gearing, that was largely maintained throughout the period, despite the additional capital which we'd been spending on the revenue-generating macadamia developments. And the way that we'd been able to manage that effectively was through some divestments, one of which I outlined in the earlier slides, which was the 50% sale of those 2 cropping properties which we developed. A bit of a snapshot of our valuations, which I'd sort of describe as effectively being flat over the prior half. But importantly, from a capital management perspective, we've ensured that our facilities have sufficient headroom for the capital that's required for the development activities that we're undertaking. So that's really a snapshot of the results. In terms of the outlook, we have forecast distributions in FY25 of 11.73 cents per unit, which is consistent with what was on the earlier chart. We're forecasting adjusted funds from operations of 11.4 cents per unit for FY25. And we've also taken the step of providing a distribution forecast for FY26 as well. And that is a maintenance of that distribution of 11.73 cents per unit. So this is in the next financial year, which based on where we're trading on at the moment would represent just under a 6.5% yield.
Absolutely. Absolutely. Well, we might start to answer a few questions as they come in. Obviously, as you've mentioned a couple of times, there's definitely some assets that we've been selling in the past. What are the type of assets you're considering to sell at the moment? I understand that in your last presentation that you had, there was some interest made. Will we hear any more information about when this sale's been completed, or what's the go?
So when we're looking at things like asset sales, things we're taking into account, of course, would be the revenue generation, both current and then the prospective revenue generation in the future. We certainly don't want to provide a list of things that we are considering for sale, but our approach has been to really pragmatically manage our capital position using a range of strategies. And one of those strategies has been appropriate divestments of assets so that we can bring our gearing towards our target range over time to 30 to 35%.
Yeah. And so what are some of the terms of the leases then?
Yeah, it's a good question. They're a lot like a lease of other property types, whereby you're effectively getting a percentage of the farm value as your lease income. We don't disclose the individual lease rates, but this schematic on the left-hand side gives a good overview of the types of lease rates that you can expect for various sectors. So the right-hand side of this spectrum has the cattle and cropping sectors, and you can see that the lease rates are within the realms of the 5% mark. If we then move over towards the left, you've got more developed assets, such as almond orchards and vineyards and macadamia orchards, and they're in the 7 to 8% lease rate, if you will. The reason in part that those types of assets command higher lease rates is there's a depreciating element to those businesses. You've got infrastructure which has a useful life. You have the trees themselves which have a useful life. So you as asset owners need to be compensated for the fact that a portion of your asset base isn't growing as fast as, say, the assets on the far right-hand side, which are almost exclusively natural resource predominant. So on a cattle and cropping property, you've got fairly low levels of depreciating infrastructure. The majority of that asset base is scarce natural resource. It's land and water, which if we look at various cycles, both in Australia and even in the US, which has good data that goes back well over 100 years, that tends to grow at around 4.8 to 5% per annum through the cycle.
Yep. Okay, well, one of the questions that's come through is, what are you doing to improve the sustainability of irrigation, particularly during dry spells?
So we've always focused on irrigation really closely. I mean, it's a driver of yield, and managing that resource to extract as much value out of it as possible is really sensible. So, for example, when we lease out assets, particularly with permanent plantings, we're seeking to ensure that those assets have a certain quantity of water, which is then leased to the operator, so as not to put the operator in a position where they need to make a decision around whether or not to buy in additional water for those assets, particularly in dry periods. And that's really a philosophy that was developed in our business through various droughts that had been experienced in the early and mid 2000s. So focusing on the fact that assets have sufficient water is definitely part of our investment strategy. Then adjacent to that, which is also I think relevant to the question being asked, is how do we ensure that water is delivered optimally, and that's through high quality irrigation infrastructure, such as the infrastructure you can see on the screen in the schematic here, or in our water storages as well. So in the case of these water storages, they're being developed to minimize both leakage as well as evaporation, and then that will enable higher deliverable irrigation entitlements to the assets.
Okay, so when it comes down to, let's say, a commodity downturn, how are you protected on that side?
The majority of our leases are not structured with a reference to the commodity price. So those lessees, which are very diversified, well capitalized businesses, overwhelmingly in their own right, have a requirement to pay rent regardless of commodity prices. When you're in agriculture, you will have higher commodity prices and you will have lower commodity prices. And so that's why we're really focused on providing our lessees with high quality assets that can produce high yields, because a high yield is, of course, somewhat of an insulator against commodity price volatility.
So what do you think the key misconception the market's missing about RFF today? Do you think, the risk adjusted income, what should be the case? What's been missed?
I don't think it's sort of to me to comment on or speculate on what the market may or may not be thinking, but fundamentally with the Rural Funds Group, what we're managing is a pool of very high quality agricultural assets. They're leased to the majority of those assets, I should say, at least to high quality lessees, and we can stand by a track record of improving the value of farms, and that's improving our unit holders' net asset value, and then growing the income that is being produced from those farms, and that's been the major driver behind ongoing distribution growth within our business.
Okay. You mentioned obviously a lot of developments being made on these macadamia farms. When are these projects meant to be finished up?
Good question. So we we have leased out 3,000, or we entered into a lease to lease out 3,000 hectares of orchards, which are under development, and we expect that they will be completed, materially completed later this year. The important element there is, of course, that the rent is linked to the deployment of capital. So we're nearing the end of that development runway, and as we've been deploying capital, we've been generating additional income, and we expect that to occur around later this year.
Excellent. Perfect. Well, we might leave it there with the questions. Have you got any final comments for the investors and people today that attended the webinar?
Oh, look, just thank you for your interest. Please don't hesitate to reach out to us directly if there's anything that we can provide further clarification on, and certainly within our business, we're very much focused on that ongoing distribution yield for our investors, derived ultimately from managing and developing and providing to lessees very good farms.
Absolutely. That's beautiful. Yeah, well, thanks so much for your time then, James, today. It's been an absolute pleasure. Well, we'll have to have a bit more of an update later on down the track. Hopefully hear a bit more about those macadamia farms. And apart from that, if you do, as James said, have any questions, please shoot through an email directly to him. He's happy to answer those, and we can go from there. But from ShareWise, as myself, Lachlan Callahan, advisor here, it's been a pleasure having you, James. We look forward to having you again.
Thank you, Lachlan. Appreciate it.